record, yeah. All right. So good evening. How was your weekend going? How was the trading week?
Fine, fine. Come on.
Okay.
Trading week awful. I said trading week is awful.
Nah, it's to be that sometimes.
Eh,
I say it happens sometimes. Sometimes you get it right, sometimes you don't. So the ways and else. Even Tech Receiver, like how you do the hard time. He said he reached his account, his 200K account. So everybody's
yeah,
having. You saw the post, right?
I saw huh? I
I
saw
think
the
you saw the
post.
post. So nobody's
Yeah,
invincible. Nobody's invincible here. Everybody's
true, sha.
everybody can invest from the market at any point in time. So usually, another block is said to be. Let me just go by it quickly. Another block is said to be. Is usually said to be the last bullish or bearish candle. I think this was what I treated in my last the live session I held the last time on my channel. But like since you are not there, so let me just go over it
No,
again.
I was not. I went to work.
You want to work? Oh, sorry. Sorry
Yeah.
about that. Another block is usually the last bullish candle for a bearish break of structure. That is in. Let me make illustration so you understand. I think I have an uptrend. No, I think making a representation like this will be better. Let me use actual candles and them. Then you have an expansion like this. And you have a big expansion. So another block is usually said to be the last bullish. Hold on. Just don't mind my candle. Like you get the gist. This is the candle I wanted to like change the look of the. Okay, yeah, I've changed it. Can you see my screen?
Yeah.
So another block is usually said to be the last. It's vice versa. It's usually said to be the last bullish candle before a bearish break of structure. Let me impart my skill for the definition I'm giving, invert skill. So let's say price was you are seeing something like this in price, like price was going up, was coming up. The all of a sudden price got here. Then we see price got here. Then we start to see sell rejections in the buy trend. Then we are starting to spot weakness in the trend. So usually like this, price leaves behind another block, which is usually, I said usually because in some cases it might be any candle. Marking out your other block might be any candle, but like usually it's the last bullish candle before a bearish break of your bearish break of structure. So in most cases, we see price do something like this. Then price gets here, we see a candle formation similar to this one. Then after the candle formation, we get to see price take out probably the protected low here, then continue downwards. So like I'm just trying to go by it again, so you just grasp the whole thing about other blocks, right? And what usually makes other blocks valid are they are not that much. It's just another block might it should always sponsor a break of structure. So before you might actually say another block is valid, you must see a break of structure after the other block. I don't know if you get what I'm saying. Like we're seeing something like this. Start seeing something like this. So we're starting to see a series of break of structure. We have a series of bullish break of structure. So another block is usually said to be the last bullish candle here, somewhere here, or the last bearish candle here, before you see price expand to this upside, then take out this high. So beneath every break of structure is another block lying there somewhere waiting to probably be mitigated. So we have sorry about that. So if you want to spot another block, if you want to spot it, your first thing you need to do is you first need to identify the obvious breaks of structure in your market trend. So probably if you're on the 10, 15 minutes time frame or the 30 minutes time frame, first of all, mark out all the breaks of structure that you can see in correlation to the trend, like in the direction of the trend. If you are bullish, you mark all the bullish break of structures. If you are bearish, you mark all the bearish break of structures. Then after you mark all your break of structure, then what you want to do is in between that break of structure, in between the high and the low that was taken, in between the high and the low that created that break of structure, beneath it is another block lying somewhere here. So usually, if you continue to see break of structure like this, price will continue to create another block. Like here, there's another block. Here, there's another block. If price rejects like this, then comes here again, then causes another break of structure, there's definitely another block here. So in all of these places, you can identify other blocks. That's where you spot other blocks, and that's where you like look out to mark out your value of other blocks. It's not just that you see probably a bullish engulfing or something that looks like another block anywhere in your chart and you just mark it out. It might not be valid. It might just be a candle formation. So like, are you following?
Yeah, I'm here.
Are you lost about anything? I don't want you to be left behind or anything. So if you are actually lost about something, just tell me.
Following up.
You're following up, right? Okay,
Yeah.
good. So I've defined another block and I've told you how to spot another block. That's like the basic one. Now where most people have issues and the same one they're having is how to actually identify which candle to mark out for your other block, right? And that's what we're supposed to be treating right now, if I'm not wrong. So we said that definition. Another block is the last bearish or bullish candle before an expansion. So in this case, we have another block staying at us right here, this place here. Can you see it? Now the fact that you see another block does not mean it is tradable. That is another thing for another day. I think we're here to learn how to identify valid other blocks, right? So, and what makes it valid? You can see like just right above the other block, you can see price takeouts a preceding is this a high or a low? What do I call it?
It's an high now. He
It's an high.
inverted this.
Okay,
Yeah.
oh sorry, I inverted my skill, yeah. So like you can see price take out this level, then creates a new one. Then price comes back down, creates price comes back down, then gives us another expansion. Now here's the tricky part. Here, to work out the other block here, we said price is usually the last you can't get the gist.
After every break of structure, price leaves out.
So usually the last bullish bearish candle for a bullish break of structure or a bullish candle for a bearish. I'm just like repeating myself over again so you don't get lost somewhere. So here, our other block is I don't know. Hold on. If you go to a much lower time frame,
I'm seeing it though.
You are seeing it. So which is it?
Yeah. The third blue.
The third blue,
before
right?
the black. Yeah. Yeah,
Okay.
that particular one.
Hey, sorry, I used them. I'm actually taking it easy. There's something else you need to look out for when marking out other blocks. But let's just start from the basic part then before we go to the complex parts. So this, you said this is our other block, right? This blue candle.
Yeah.
No, wait. It's just right here. This blue candle, right? But like, should I break it to you? That is not the valid other block to mark out in that level. Now, if you don't want to get it confused, one thing you should probably do is just mark out this place, then go to a much lower time frame, probably 15 minutes. So we just go to the 5 minutes time frame. Then once we've gone to the 5 minute time frame, probably you can see something we're actually familiar, like very, very familiar with. Okay, so now we see it. Can you see it now? Can you see that it's not the candle you marked out? The candle you marked out is somewhere. Hey, I'm coming. But this was the candle you marked out. Eh,
I'm confused.
now you are confused, David. I'm coming. This candle,
What I
that blue
marked out.
candle that looks,
Is this the 5 minutes time frame?
yes, this is the 5 minute time frame. That blue candle that looks like an indecision candle, right? That was the candle that I marked out.
Doji.
Am I
Yeah,
correct?
it's a doji. Doji.
The
Yeah,
doji
yeah, yeah.
candle. Now, if you look closely on this 5 minutes time frame, our actual order block is right here. Is right here. This very, very long candle, because this is the last one before we see price expand. So this is our order block, not the candle preceding it. Oh, sorry. Can I see it down? This candle,
Yeah.
like, yeah.
Go to 15 minutes time frame. Let me
So
see
like,
something.
hold on. Like, I want you to get something. I just want to explain something real quick. So if I didn't want to come down to the 15 minutes time frame, sorry, to the 5
To the
minutes time
5.
frame, and I wanted to mark out my candle or the 15 minutes time frame, here's what I will do. Now, the third criteria for validating another block is, okay, I think this is very, the third criteria for validating another block is simple. The wick of your other block candle must be longer than that of the
The
candles
preceding
preceding
candle.
it. Eh? Hold on,
The
hold on.
preceding candle.
Yes, the wick of the candle or the body of the candle that you're marking must close below or above the candles that are preceding it. So in this case, our other block is not our bullish candle. Our other block is, let me mark it out. Our other block is this candle right here. A. This black candle.
Not the one with wick.
Not the one we no, not the one we blue. Not the one we wick, rather.
No, the other one close to it.
Oh, this one.
Yeah.
Not this one we like, not necessarily this one we weak, because you now look here, look here, look here. Here's the tricky part. Look here. If you actually say you want to mark out the one with the weak, now this is a whole lot to mark out for another block. Do you agree with me? If you mark out the one with the weak,
Yeah.
you are actually
I'll be
correct,
thinking.
but like you'll be
I'll be
having a
thinking.
lower RR. Do you get my
Abi?
like? Do you get this? You'll
Oh,
be
okay,
correct,
okay. I understand.
but you have a lower risk to reward. Now look at this. This is where you pick your entry. So let's just say for instance, I want to like take this trade and I pick my other block here. Now it surely got mitigated, which is very, very obvious. It surely got mitigated. Oh, it's inverted. My skill is inverted.
Tell.
It surely got mitigated,
Sell.
and I have this, and probably I buy to this level. I'm just saying for an instance. Now you see 1.46. Then if we were to pick this candle that I initially marked out, this is going to be an entry. And if we adjust it back, we got mitigated and we have a higher reward for our risk. Can I see the difference?
102.
Yeah?
Yeah.
So like it's
Yeah,
just
yeah.
a
I've seen.
refinement skill. Now we cannot overlook the fact that we said it's usually the last candle before the expansion, before price expands. So this candle right here, it actually ticked all of our boxes. Why? Because all the candles preceding it, the candle closed below all of them. I'm coming. Okay, you see price. See that it usually set like price swept liquidity of the previous candles. So you see this black candle closes like below all the blue candles here. So initially, if
Yeah.
blue candle was to close below these ones, the previous ones, would have marked as the blue candle as the other block. But you can see that it just came there and it didn't even like it didn't go beyond their levels. So they closed at almost the same level, the last 3 candles. So you can mark it out as the other block. So you mark the black one. And this black one, mark it out. Then that's our other block. And what do we see price do? A clear mitigation. So can you see?
Yeah.
Now this is a valid block, and so is this one too.
But that one is not respected because price is
That one didn't get
bullish.
respected because news, not because price did somehow, because new scheme.
News.
Yes, it was news that expanded this thing downwards. I think
But
I actually had the setup that I wanted to sell from this POI, from this POI here.
it's what I'm saying now.
I
I
had
thought
I had
news
this I had
doesn't have
this I had this POI, but it didn't hold. So like I later discovered that I was trading against the trend because I checked the higher time frame and I saw
it's what I'm saying now.
yeah. So it was counter trend. That was why I didn't respect it. But you could see that when price got there, price slowed down a little bit, then consolidated. I didn't mean news didn't come. Price might have rejected a little bit. Like price will just go down a little bit, then continue in the direction. Because price is most likely to react from every other block, be it bullish or bearish. But like the reaction might not like be might not take long, or it might not be a long-term reaction, but like price is most likely going to react from another block. So let's identify a few more so I can mark out a bit so you can see more and more examples of what I'm saying.
Okay, wait, I want to ask something.
Okay,
What if
ask me.
what if it's a single candle?
What if it's a single candle? Okay, there.
Mm,
I'm coming. But I'm going to like I'm going I'll leave this pair and go to other pairs. So the only thing I want to do now is just to identify other blocks. Now you can see here. I think I marked this when this meeting, this call started. These two. Now these ones are not even hard to these ones are not hard to identify. These ones are not hard to identify. You can say, okay, let's take this for example. Our other block is, I think I did a mistake. Our other block is this candle, this one, this black one. Because it was the one that swept liquidity all for the previous candles. Let me I'm doing that. So in this case, our other block is this black candle right here, not this one, not this one. But the tricky part is if you had matched this one, you are still on the same page because like it's most likely the same entry. Like the entry is going to be the same, and but if you want to follow all of the criteria given for another block, this candle, this one inside didn't clear liquidity of the previous candles. So the one that cleared liquidity of the previous candle was this one, this first one that I marked out. Are you following?
yeah,
Hello?
yeah, yeah. I'm following.
You are following,
I'm
right?
following now.
And let's just drag that a little bit. What do you see price? The price just came there and tapped on it, then continued. Like it just sniped it. Price came, it didn't even go far at all. Price came, mitigated it, and then continued in the market direction. Then the mitigation created another other block. Now this one is not even hard to spot. Like this one is actually very, very simple. You can actually see it's the last bearish candle for the bullish break of structure. And all of our other blogs are sponsored a break of this one didn't really break, but like you can't take away the fact that price got there. So all of our other blogs sponsored a break of structure at some point. And what do you see price? The price came back, respected it, then continued, came back, like raise and repeat. Price kept doing that over and over again. So that's what we continue to see. And hold on. Blah 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 blah. What else is there? What else is there? What else is there? There's something more, there's something more, there's something more. Because like you get to see different scenarios. The market doesn't present the same
Yeah,
thing every time. I think there's one more thing that you need to look out for. Okay, this is this is most likely another block, this place. This is most likely another block. But it has not sponsored any major block of structure. Like we still have this place, still have here. So the moment price takes out either of these lows, is it a low? Yes. The moment price takes out either of these lows, this might probably become a potential place to sell from. But until then, let's just go back to like the past price action and then identify valid dollar blocks that we have. Now have this at the back of your mind. Not all order blocks are tradable. You most likely are not going to pick trades from order blocks. Are you following?
Yeah, I'm
Because you see
following.
price created order block somewhere doesn't mean you are going to buy yourself from there. You actually need to have a clear understanding of how to pick your entries, like POIs, and the things to look out for when picking a trade. So this is another block. Undoubtedly, a very clean one and simple one. This is another block. Do I need to explain anything?
No.
Or you can even go as far as picking. If you want to refine, you can go as far as picking this one. Can I see the one I picked? The actual last bearish candle. This one. Do you see it?
Yeah,
So that's one other block. This is another other block. Okay. There are other blocks everywhere on the market. There are other blocks. Other block got created, price mitigated, it continued. And if you look closely, you see a break of structure. It might be fractal, it might be a lower time frame structure, but a break of structure is a break of structure. Price takes out a high or a low. It doesn't really matter. Then here too, where's the other block in this case? This was actually tricky, but here too, we'll take this as our other block, this black handle. Price price came down, created another block, then continued. So, created a break of structure, then mitigated and continued. So like that, we've seen price done the same thing over and over again. In this case, our other block is this last bearish. But we can't take this last bearish candle. Why? Because another block, if you want to see another block formation, your other block candle must be engulfed by the next candle. That means the next candle must close above the other block candle. Do you get what I'm trying to say?
yeah. Like this one now, the thing didn't, the preceding candle didn't close above it.
Yes, you
So
get. So like if you want to mark out, because beneath every break of structure is another block. Take it or leave it. It just depends on how skilled you have to spot it. So this is a break of structure. We can't deny that. This is a break of structure. Um, this is a break of structure. Then we'll take this blue candle as our other block. Now, if you had gone down to like 30 minutes, you had gone down to like 30 minutes. Do you now see the full other block? It's actually that black candle, but it was just because of the time frame that we were on. The other block was a black candle. In this case, you might actually just neglect the wick. The bullish candle engulfed the bearish candle. So this is our other block. If we're being honest with ourselves, and I think that's where price is supposed to be headed. That's where price is. Nah, ain't no way. That's where price is headed. So I'm looking for scenarios like, okay, this one is actually very, very clean, a very pretty one. This one right here. Are you following me? Like, are you not lost? This one, very simple.
yeah.
It's just like as defined in the textbook. So we see price mitigate, dump a little bit, then till this thing just reversed. So for somebody that actually has a trading plan of I think 1 to 3 hour, 1 to 5 hour, or 1 to 4 hour, that's a very, very static trading plan. He follows it. He might have taken profit on this trade, or even taking partials. I think it is 3 hour. Price did 4 hour. Then the 4 hour mark, price reversed. So for somebody that actually had probably a trading plan of once price gets to 3 hour, I am what's it called? I'm taking partial, placing my position. Best may actually be safe. But for somebody that wants to take the whole position and go straight to TP, take out the extra liquidity, price may actually fool you. And this is actually another entry model that I trade. This is my holy grail, KMR, see price, or head and shoulder, call it whatever I want to call it. See KMR here, price, left shoulder, right shoulder, price tap, then continue. Hey, sorry for the this thing. Maybe waiting for switch with that. We're still identifying other blocks, right?
Huh?
I say I see identify other blocks. So look at another beautiful example that might get you confused. So in this case, here, price actually sponsor every structure here. So this is not the other block you want to mark out. This, I think this, yes. This indecision candle is what you want to mark out because it's the last candle. Sorry, it's the candle that cleared liquidity of the previous candle. So this one, I see my candle that I'm marking out. No. I think I marked the wrong one.
Yeah.
Okay. This one. This last candle before this expansion. This last candle before the expansion. So usually the candle before the expansion. So it might be bullish or bearish, but just make sure it clear liquidity of all the previous candles. So that's just what you need to look out for. Now you don't get used to it, like you just need to practice it over time and times again. Now to make it simpler, first of all, here's the cheat code. First of all, identify breaks or structures. Okay, and have it at the back of your mind that in between or beneath every brick or structure, there's another block. So after identifying brick or structures like on your charts, after identifying a lot of them, then you just need to calm down and pick out or mark out the other blocks you can find amidst all of them. So you get. Can you hear me?
Sorry. I get you.
Getting right here now.
Yeah.
Do you have any questions? Or should I go to another page?
Okay. See,
So I'm listening.
no,
I'm listening.
uh,
Hmm?
in terms of entry models, in terms of entry models, like you see this particular entry model.
We have 10 minutes
Okay,
left to
you see
like,
classify
I
this.
can't hear you. Make it snappy.
I say, will you still classify this valid OB to this entry model? Is it
Yes,
what
now
you use
you can see
this
my
to this?
entry was another block. Okay. Entry was another
Okay.
block. This was the last bearish candle for the bullish expansion. Simple as ABC. So this candle. So like the whole charade about the entry model, liquidity, all of those stuff is just to know high probability other blocks that you can take your trades from. That is why most people have entry models. Now if you take very well, entry models are usually surrounded by our usual entry model, sorry, our POIs that we know. FVGs, breakout blocks, other blocks, mitigation blocks, and all of those things. But like
So,
the whole thing about the
sorry,
entry model is, huh?
sorry. So after finding the pattern,
Mm-hmm.
you check, you look for valid OB. That's all.
No. Like that's not the whole thing. Ah, we don't have much time anymore. But like that's not the whole thing. So here's the thing: you look for your entry model. Now,
Mhm.
most entry models have either an order block, a breakout block, a mitigation block, a liquidity pool, like any entry criteria that you know that or that you read so far, like expansion type entries,
Even
breakout
liquidity
blocks.
void,
Yeah.
liquidity void.
Yeah, all of those things. So like people just tend to build, it's more like building a fortress around something. So in this case, people just build they studied the charts and they see other blocks that are most likely going to play out. And they studied them and they drafted it into an entry model. So once you see a liquidity sweep before another block, and that other block happens to have after the liquidity sweep happens to have another liquidity level that's supposed to be swept. So it's more like 8 out of
Uh,
10 times. It's not like 8 out of 10 times that other block is most likely going to hold. That's the essence of entry models. It's not as if entry models is own complicated stuff like that. Ah, this beautiful trade I took on
okay.
Monday. He was it last week?
Hello.
I can hear you. I can hear you. Talk to me.
Okay. Say thank you. You have tried. Thank you.
Okay, so like you just don't how do I put it? Just lap off just
Complicate.
your charts and identify. Now, don't
Oh,
make mistakes. Don't get it mixed up. Identify breaks or structures first. You can choose any trend, you can choose any time frame. But like for you to have more options or more places to choose from, just go to the minutes time frame. You can start from the 30 minutes, you can go to the 45 minutes, you Yeah, go to the 15 minutes. If you want
but
like to see more and
but
more.
in all, sorry,
Okay?
in all, and guys,
Mm-hmm.
to
I can hear you. Hello? I can hear
hello,
you. I can hear you now.
I hear me.
I can hear you now.
Hello. Okay, I
I
said
can.
in all to gain stability, you need a trading plan, right?
Yes.
Okay.
Because like you actually need a training plan. And a training plan is not something that somebody does for you. It's something you actually get to come up with yourself.
Do by
And why
yourself.
do I say
Yeah,
that?
yeah.
Because as a trader, we have different personality, we have different we I don't know, like some people are more patient than the other. We have like different experiences about life and we have different perspective about see things. So for somebody like me, I don't swing that much. Like I'm not a swing trader. I when I start my top down analysis, I just start from
Scout.
no, I don't scalp. I don't most necessarily scalp, but like I don't plan my trades because I want to swing. I don't have plans of winning a trade for a week, 2 weeks, and all of this stuff. And why? It's because
Mm.
of my patience level, the kind of person I am. I just want to like go in on the trade and go out of it, then get the pressure of my mind, then focus on something else. You know, like once you're in a trade, your mind is tied to it and you're always checking it and panicking and all of those things. So like I'm not that kind of
Yeah.
person. I just want to like feel the pressure of taking a trade today and yesterday. If I win, fine. If I lose, fine. So I most of my setups are intraday trading. And in my setup, crosses a if my setup is to like lapse, probably a day or two. That's the maximum. My setup never crosses 3 days. So, and that's the kind of person I am. Now, you
Two or,
might be a lot
two
more
or
patient
three
than I
trades
am.
a day.
You might be able to swing, you might like the long term thing and want to probably hold it, open a position today and take your profit by next Friday. That depends on your personality. That depends on the kind of person that you are. And we actually have different sources of income. We have different risk appetites. A lot of people are like quite some people have a lot of money to risk more than other people. I might be conservative in my risk management plan, while you might have the money to risk and probably just go all in. I might decide to risk 1% because that's what I can afford to lose. You can decide to risk 50% because that is what you can afford to lose. So like your trading plan is just something you come up with by yourself, and you might actually take a look at other people's trading plan. So you might know how you like devise. Sorry,
Start on
you
that.
come about yours. Am I not rushing you? Like, are you
I,
getting the
no,
whole thing?
no, I'm hearing you. I'm hearing you.
Yeah, so like it's not something you just copy and paste from somebody else because you and the person are two completely different people. You might be in the same field, you might be in the same like line of work, but you have different personalities. And the actual war in trading is with you. Like it's not the hardest part about trading is mastering yourself, not the technical analysis, not the skill. It's about yourself because at the end of the day, you might be the best analyst out there, and once you are in your MT5, you want to execute the trade, like you become a 2-year-old, like you don't even know how to manage your risk and all of those things. But on the chat, you are just killing and slaying. Then when it comes to the actual thing, you're panicking or like you should get what I'm trying to pass across. So different people, different personalities, and different experiences. We see life in different form. So you actually have to come up with your own trading plan by yourself. So you might actually review few
Hello?
people's trading plan, and you know
Hello?
how you come
You
about
said?
yours. Yeah?
I said is exactly what I'm facing. Oh.
Oh, I ran out of time. I ran out of time. So
But
I don't have mine written. I don't have mine written. Actually, I have not officially drafted one yet, but like I have some off my head. So
a
like
trading
I know once I've seen this thing, I'm taking partial, I'm setting break even and all of those things. So you just have not actually concluded outcome about an actual one or starting one for myself. I'm a work in progress. I'm still developing. I've not gotten like where I wanted. I'm nowhere near where I want to. Like you might forget all of the fun after that I've seen on the Telegram channel. I'm nowhere near where I want. So I'm a work in progress. Everybody's just progressing.
giving in their all.
Hmm?
I understand. I say
Yeah,
everybody's
so,
giving in their all.
so everybody's just trying and giving it their all. Hopefully it pays up some bit.
Yeah.
So would that be
Thank
all for
you.
tonight?
Yeah, you have done well. Thank you.
Okay. It was nice
I
listening to you.
appreciate. Thank
It was nice listening to you and enjoy the rest of your weekend. Good
you
night.
too. Thank you. Good
You're
night.
welcome. And